its worst day in 5 weeks yesterday, following lower earnings from Walmart and mixed news about the economy, as figures showed America's industrial production fell in April. Now, airlines and travel stocks again endured a tricky session on concerns about the strength of demand from UK consumers during a World Cup summer. An update from Germany's TUI, which owns, of course, a stake in Thomson and first choice business TUI Travel, failed to boost spirits, despite the company reporting a smaller loss for most recent quarter, its share price closing down nearly 4%. AstraZeneca, meanwhile, was another notable riser in the top flight, although the improvement still left its shares well short of the 50 pence a share on the table, £50 a share on the table from US rival Pfizer. Meanwhile, shares in Carphone Warehouse and Dixon's Retail Group remained under pressure after nosediving in the wake of their merger deal, shares closing down 3.75% at the end of trade. The slump, which reflects concerns about the risk and the cost of integrating the two companies, means the deal is now worth $3.3 billion rather than the $3.7 billion that we saw yesterday. So let's get detailed analysis of all of the markets and also of all those individual stocks. Let's talk now to Naeem Aslam, who is Chief Market Analyst at the Head of Market Analysis Desk at AvaTrade. Now, Naeem, let's start talking first of all about airline stocks. Big losers today on the market, in particular TUI as well.
Yes, thanks for having us. We are not too much worried in terms of airline stock, because the demand is there. Like, let's talk about from a UK perspective. The wage growth is, for the first time in a very long time, it has exceeded the consumer price. So that is a front end of the consumer confidence. And then UK companies or UK government, they have published that the employment data is very, very strong, and it is at lowest level since 2009. So we believe that any kind of a dip right here is an opportunity for possible buy for this dip.
Let's talk about AstraZeneca now. We can see the share price here next to me. It closed up 2%. But at £48, it's still well short of the offer on the table from Pfizer. Why have we seen Astra's share price creeping up today? Is there rumour, perhaps, that a fresh offer from Pfizer is imminent?
Exactly, Mariam. I think that's what is really going to happen, because the right money would definitely AstraZeneca going to accept that offer. But let's take a step back and then talk about in terms of for Pfizer whether this deal is actually good for AstraZeneca and for Pfizer. From shareholders' perspective, it is definitely a good deal, because Pfizer is like 186 billion worth of market, and they brought $51.6 billion, which was exactly the same amount of revenue that the Google brought. But in how much they're going to save, US tax rate is 30% and UK is 21%. It's going to fall down to 20% in 2015. So from shareholders' perspective, it is an absolutely good deal. But from AstraZeneca's perspective, their shareholders, they're going to get a good money. But whether there would be job cuts, yes, for sure, there are going to be plenty of job cuts and possibly a spin-off of AstraZeneca few businesses.
Okay, and finally, let's talk about Carphone Warehouse. So the talk of the town yesterday, Carphone Warehouse has merged with Dixon's, but Carphone's share price suffering today. Do investors not like the deal?
To be honest with you, it is again a defensive strategy, because small operators such as 3 Network, they have already left Carphone Warehouse. Vodafone, they are assessing the situation if they wanted to stay with this companies like Carphone or Phones for You. But here is the trick. Phones for You, Vodafone is looking to open up 150 new shops, but Dixon's already have 500 units. So I think combined Carphone House and Dixon's is going to be a good deal in the longer term. And then plus, both companies would be able to save a large and substantial amount of capital in terms of marketing and for this merger.
Okay, Naeem, good to get your point of view. Thank you very much indeed. So let's recap one more time. London shares ended just about in positive territory today. It's been a difficult day for the London market, tracking losses on Wall Street earlier in the day. Highs and lows for the market in London. Various stock prices doing well, like for